Alrighty, very important we start here with AMD. Before we go any further, you've got to understand this. AMD has three main segments of their business that they kind of group things into here, okay? They have their data center business. Now, that can compete against Intel in some ways. In other ways, it's going to be competing much more heavily against NVIDIA over the coming years, okay? And when you think about data center business, think about all these massive companies that are spending all this money, from Oracle to Meta to Google to Amazon. You know, go through the whole list of them. Think of them as data center, okay? Then you have the client and gaming business, which think of it more as PC related, right? And you have their embedded business as well, which a lot of that's from the Xilinx acquisition they did many years ago. And embedded business can be in many other products out there, right? And it's also important to understand that they did a acquisition here recently, a fairly big acquisition of a company named ZT Systems, which is basically going to help position the company in a much better competitive, let's call it framework, to go against NVIDIA over this next 10 to 20 years. Now, did you hear what I just said there? 10 to 20 years. People think this AI battle is like just going on right now. No. There's going to be an AI battle that's going to happen over the next decade or two. This isn't just some companies are going to spend some money on chips and then we're good. No. The tech's going to keep moving and keep moving and keep moving, okay? And there's probably going to be some day when, you know, it's very commonplace for many of these companies to be spending hundreds of billions of dollars on infrastructure as their businesses continue to grow. So do keep that in mind, okay? Now, revenue. This was pretty dang impressive. They did 36% year-over-year growth in revenue, which beat, you know, pretty much just about every analyst's expectations out there, okay? Now, keep in mind, this rapid growth of 36% year over year, one, how many companies are even doing a number like that? Like, think about how many stocks are in the stock market. How many are reporting revenue growth of 36%? I can't really think of almost anybody. Like, you look at all the big tech companies, none of them are even remotely close to that number other than NVIDIA. And that's it, right? That's an incredible number given the environment we're in. And keep in mind, this is all before MI350. Like, MI350 is really going to get rampant this summer, right? So we're experiencing this rapid growth rate already, and we're not even to like the really exciting part yet. The really exciting part starts with MI350, but really that's just an appetizer to get us to MI400 next year. And then you want to talk about some numbers we're going to be revenue growth in both data center, client, and gaming segments. Gross margins here on a GAAP basis up to 50% from 47% in the same quarter last year. Non-GAAP gross margins went to 54% from 52%. So we not only have revenues exploding to the upside, we have margins moving up as well. Increase in gross margin primarily driven by higher data center segment revenue and richer Ryzen processor mix. Keep in mind, in regards to these margins, I think you're going to see a major move up again when we start really hitting those MI350 numbers. So these numbers you're seeing in front of you right now, I think it's about to go a whole lot higher if we're to fast forward a year from now, okay? Now, operating income here, banger. Look at what happened at GAAP operating income. I mean, it went from basically flat at this time last year to around $800 million positive. And then on a non-GAAP basis, $1.8 billion. $1.8 billion in non-GAAP operating income in this quarter versus $1.1 billion in the same quarter last year. Incredible increase in operating income driven by higher revenue in data center segment and client and gaming segment. Diluted EPS on a GAAP basis came in at 44 cents versus 7 cents was expected in the same quarter last year. Non-GAAP 62 cents was what they did at this time last year. They just did 96 cents on non-GAAP basis. Phenomenal. Data center, this is where all the focus really is because this is the big growth engine for NVIDIA. Like, NVIDIA's other segments of their business are going to be growing over the next number of years, right? But this is the big dog. Data center is the big dog. This is the one that's going to grow into likely a business that's doing tens of billions of dollars, multi-tens of billions of dollars year in and year out, right? Revenue went to $3.7 billion in data center from $2.3 billion. That's 57% growth on a year-over-year basis, folks. Once again, we haven't even gotten to MI350 yet. And MI400's next year. This is not even the fun times yet. And we're already got 57% growth in data center, right? Next gen MI350 series Instinct GPUs are on track to begin accelerated production by mid-2025, which is basically in the next couple months here, right? Absolutely phenomenal. Operating income went to $932 million for the data center segment from $541 million. Operating margins went to 25% from 23%, right? Guys, imagine how big this business is about to get when those MI350 start hitting and then we get MI400 next year. Like, geez. Woo-wee. Client and gaming segment. Now, this is really interesting because they ended up combining these two segments together now, right? So what's interesting here is gaming's still a drag on the business, right? Gaming was $900 million in this quarter last year. They did $600 million in this quarter, right? Keep in mind the gaming segment, I've always expected in the back half of this year to flip back to growth again. Okay, that business has been in decline for many quarters in a row now at this point in time. Back half of this year, we start having some insanely easy comps, and I'm a full belief they'll be able to start growing the gaming segment again starting in the back half of this year, okay? Client business grew from $1.4 billion to $2.3 billion. Revenue up 28% for the segment overall. Operating income went to $496 mil versus $237 mil. Once again, imagine when that gaming business flips to growth, in my opinion, in the back half of this year. What's going to happen with operating margins? What's going to happen with operating income, revenue? It's going to get a lot more exciting in regards to that, right? Now, the embedded segment. This is where, hey, listen. I appreciate you guys, right? And I hope you guys appreciate me because the data I'm about to take you through, no one's taking you through the numbers I'm about to take you through here right now, okay? This is like, there's only one place you're going to get this sort of data, okay? Embedded segment. So you look at this number, you see, okay, it's down 3%. And you think like, is that bad? Is that a bad number? Is that a good number? Like what's going on here, right? Listen, the embedded segment is about to turn positive. It's about to turn positive. And here's why we know this. If we look here, 2 quarters ago, the company's embedded segment was down 25% on a year-over-year basis. Last quarter, it was down 13%. This quarter, it's down 3%. Doesn't take a rocket scientist to say, okay, there's clearly a trend that is going in the right direction in regards to embedded, and this business is likely going to flip over to positive revenue again from some insanely negative numbers, right? Operating income, $342 million the same quarter last year, $328 million. So the embedded segment is about to get back to growth, which is, in my opinion, very, very exciting, right? So what are we going to have here? We're going to have data center business blowing up, right? Like just to ridiculous numbers as MI350 hits later on, as this year ticks on, and then MI400 next year. We're going to have the client in gaming segment business flip into very nice growth rates as gaming gets back to growth, in my opinion, in the back half of this year. And then embedded looks like it's about to turn. What are you going to say? Like you got nothing left, right? Phenomenal. Now, I'm going to take you a little deeper in regards to some numbers and some data here, okay? So the company puts out guidance. $7.4 billion. Now, from my understanding, in that they're doing a plus or minus $300 million number, right? So they're basically saying we're going to do anywhere between $7.1 billion and $7.7 billion for the next quarter. $7.4 billion is the midpoint. From my understanding, analysts were at about $7.2 billion, so the midpoint's well ahead of analysts, so which is great news. Okay, but here's the deal. They're basically going to do $7.7 billion. Okay, why do I know that? Well, one, Lisa Su knows the game of Wall Street. She wants to come in and be at those high ranges, right? She's not new to this game. She's been leading this company now for 10 years, about a decade now at this point in time. She understands the game of Wall Street. You put out your numbers, you come in and beat your numbers because no one wants to be disappointed, right, with bad numbers. So they're going to come to that high range. And also, if you look at last quarter, what did they guide for last quarter? AMD and Lisa Su in the team, they guided for $7.1 billion of revenue, plus or minus $300 million. So basically they guided for $6.8 billion to $6.4 billion. What revenue number did they just come through with? $7.4 billion, right? At the very top of their range. So I would say there's an insanely high probability they're going to do $7.7 billion of revenue in this upcoming quarter here, right? Very good overall, right? And this is why you got to kind of see these trends here. You got to be able to look back at the past data and then be able to decipher and say, okay, where's the trends going here? Are things getting better for these different business segments? Are they getting worse? How does this company usually guide? What does it mean, right? You got to put all the pieces of the puzzle together and then you begin to understand, okay, this is actually very, very impressive, okay? Now, additionally, in regards to the income statement, wow, a grade A income statement. I'll share with you in just a moment here why it wasn't an A+. But look at this. They went from $5.4 billion to $7.4 billion in revenue, right? Their gross profit went to $3.7 billion from $2.5 billion, right? $3.7 billion versus $2.5 billion. Gross margin, 300 basis points up on a year-over-year basis. They increased their R&D spend, also increased marketing, general, administrative quite a bit here. Operating income went to $800 million plus from basically flat at the same time last year, right? Now, keep in mind, net income, $709 million, diluted EPS of 44 cents. Listen, the only reason I didn't give this company an A+ is because their net margin is still relatively low. It's only about a 10% net margin. If you look at what's coming in through the front door versus what's left at the end of the pie, about 10% roughly, right? Listen, they have so much room to grow that number over this next few years. It's ridiculous. Like the net margins you're looking at in this particular quarter are not even in the same stratosphere as where those net margins are going over this next several years here, okay? We're still very early days. So that's the only thing I could really pick apart. Other than that, I mean, everything's absolutely phenomenal. And so it's a grade A income statement overall for AMD. Now, additionally, you look at the balance sheet. Look at the balance sheet. $6 billion plus of cash and cash equivalents. Short-term investments of $1.2 billion. So we're looking at about $7.3 billion-ish of cash and cash equivalents and short-term investments. And phenomenal number, right? Phenomenal number. Like they could wipe out all their long-term debt tomorrow and still have a bunch of money left around because their long-term debt's $3.2 billion, right? Now, look at stockholder equity, now up to $57.8 billion on this company overall, which is a very impressive number given the market capitalization of AMD. Keep in mind, AMD's market cap is around $160 billion or so. So to have stockholder equity of $57.8 billion is actually a really impressive number, like really impressive number. Very impressive, okay? So before we get into where I think the stock's going over the next 1 year, 2 year, 3 year, 4 years, and I take you through my bull case, base case, and bear case here in regards to AMD, let me just say I loved earnings. And the stock is, at $100 a share, buy everything in sight. Buy everything in sight. There's no question. Look at the income statement, look at the balance sheet, look at all the trends in the business model, and just understand we're about to have the really exciting phase for AMD. We're not even in it yet. MI350 coming, that's a really exciting. And then MI400 is a whole nother level of exciting things that are about to happen in this business. You're looking at a bet segment that's about to turn back to growth, a gaming segment that's about to turn back to growth. Like, my gosh, like this story is about to get, a whole lot more exciting than it's already, been. And so I love the earnings, man. Buy everything in sight in regards to this one. How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6- and 7-figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area.
6%. So basically guidance, the revenues at least, the bracket was above where consensus is. I mean, consensus is at the bottom of the bracket. But there's a big asterisk here with this guidance.
So it's the second quarter operating income guidance, which was 13 billion to 17.5, and the street was at 17.6. So that ratcheted things down. Okay, that's fine. But then you look at the quarter itself, 11.8% operating margins. I mean, that's pretty extraordinary, I think. The street was looking for 11.3. It's up from 10.7.
Oh, don't even get me started on Amazon margins. Like, those are going to increase rapidly over the next few years. Like, we're still early. We're still very early in the Amazon margin story. Just understand that. Like, the margins you're looking at today are nothing compared to where Amazon margins are going to be out 5 years out, 7 years out, 10 years from now.
There we go. I mean, these are all good numbers. Yeah, you can nitpick here without question, and maybe cloud disappointed a little bit, but I think you hit the nail on the head. I think that guide is giving people a little bit of a concern.
And drilling into that margin, operating income margin at AWS beat at Street, I think, by 350 basis points. So this profitable part of the business that we all know, some people say you get e-commerce for free, is part of the story. I think it just gets into Amazon has always had some cyclicality to it, and I feel like that's a term I know I've been using this week on Fast Money because I do think it's very important when we think about a week when we've digested not some great macro and we're trying to contemplate what's really going on in addition to tariffs. And I think in the case of Amazon, that's part of the story here. I do think that the e-commerce business, it's a secular trend. It's their business to control and dominate, I think. I mean, Walmart would say something different, but I think on AWS, again, growing cloud, and then they had this marketing business. So, I mean, I like it. I like it relative to itself on valuation. I think you have plenty of headlines.
What movie is this from? I like it. I like it a lot.
Great for Amazon, but I think in the medium term, you love this stock.
I don't think there's anything specific. It's just the nature of this market right now. We know macro is the big thing. Amazon's been an uptrend for the past 2 years. Yes. Amazon drops hard with almost every other stock starting in February. Yes. Amazon's ricocheted. Yes. And here it is sort of in the middle of the tennis court, if you will. No man's land.
If you were, I mean, did I just hear pair of twos?
It might just
sort of.
be that.
Which I learned just the other day was the worst hand you could possibly have, except for 5 random cards. I didn't even know there were 5 cards in the hand, but now I learned a lot that day.
Playing. No, but, pair of twos, but we talked about 2-7 offsuit being, you don't want that.
Yeah, I don't know what you're talking about.
Let's move on, guys. Okay, Mel, I'll do that. What all these stocks have in common, though, and the broader market does as well, the 50-day moving average crossed down through the 200-day. We've talked about this ad nauseum on the show, this death cross. All these individual names and the S&P 500 all have traded back up to the 50-day. Some have overshot it. Microsoft, for example. The question is, were those death crosses or that formation, is it strong enough to thwart what has been some good quarters? And to Carter's point, all these moves have gotten us back to a level. Is it, in fact, a pair of twos that you fade? We're going to find out over the next couple of days.
All right, let's get more on these tech results with Deepwater Asset Management's Gene Munster. Gene, great to have you.
Hi, Melissa.
Let's kick it off with Amazon since we were just talking about that. You think the guidance is actually better than how the street is interpreting. Can you explain?
Exactly, Melissa. They typically come in at the high end of their range, and so you have to factor that in. Look at the high end. The high end was 2% higher than where the street is at for the June quarter. And that really is a powerful statement relative to the macro we're in. That's what I'm curious to hear on the call is like what was factored into that. Were they being conservative? Were they taking the current environment and running with it? Whatever that might be. But that piece on the operating income side, a lot of people looked at that as a disappointment. Again, you have to go to the high end of the range that was in line with the street. So the way I look at this, they guided revenue up by 2% in a really tough retail market. So I see that as a net positive.
True. Can't debate that, right? And all these worries about the Chinese retailers and Temu and whatever the other companies are named, right? There's all these worries about those companies are kind of gonna fade here now that the Trump administration is changing a lot of the rules in regards to how those companies ship products, right? You could also look at that and say that might end up being a net positive for somebody like an Amazon in the end, right? Because more money that could be going to Amazon rather than going to those Chinese e-commerce companies that are sending $5, $20 packages over here, right? So there's just another thing to factor in there, but I mean, at the end of the day, like Amazon's just a buy. As I tell you guys all the time, Amazon's been a buy for over 25 years now, right? And it remains a buy today, right? It's just one of those stocks you want to make easy money. Make easy money, man. Easy peasy. Lemon squeezy.
Debbie Downer, but here's what we saw and what we didn't. Now, those two reports ease some of the biggest concerns around the AI trade this year in terms of demand and monetization. Microsoft affirmed CapEx, Meta raised its, GitHub Copilot users up 4x, Meta's AI-powered ad tools gaining adoption. But have concerns really been put to bed? Not quite. Zoom out and Microsoft's CapEx last quarter. It was actually its first quarter-over-quarter decline in years. A potential yellow flag, at least if you're betting on uninterrupted AI build-out, digestion or recalibration. That's not totally off the table with this report. Meta, meanwhile, did raise its CapEx plans by as much as $7 billion. But that comes with a caveat, too. Goldman Sachs expects depreciation is set to spike to nearly 50% in 2026. And Meta's own CFO told investors that infrastructure build-out costs, they will rise, driven by supply chain uncertainty and potential tariff impact. Then there is this chart. The scale of Meta's spending is eye-popping when you put it into context.
True.
It is projected to spend a bigger share of its revenue on CapEx than even Microsoft, Google, or Amazon, the hyperscalers, all of which have massive public cloud businesses.
Okay, so there's a few ways you could look at this. One is Meta's the most sure of any of the companies that they're going to get a massive payback from this, right? Yeah, that's one way you could look at it. Second way you can look at it is Meta's just, spending like a drunken sailor. They're just ridiculous over there, okay? It's crazy. Okay, you can look at it that way. Third way you can look at it is because Zuckerberg leads Meta, it's very different than Sasha leading Microsoft, right? Very different than Sundar leading Google McDougal, and very different than Andy Jassy leading Amazon, right? Those guys were executives that became CEOs. Zuckerberg's the guy, right? And so Zuckerberg's the only one that has a real leeway to spend this aggressively. So that's another way you can look at it. That's a third way, right? But at the end of the day, the way I would look at it is it's clear the one who's benefiting the most from AI so far. This does not mean they're going to necessarily benefit the most over the next 5-10 years, but it's very crystal clear that if you look at all of the big tech companies outside of NVIDIA, the company that's benefiting the most from AI today is Meta, right? Like they're the ones that are seeing the most direct return on their AI spend right now. And keep in mind, we're so early days here. Like we're only really in the first year of even thinking about making some money from AI related stuff, right? And this is a game that's going to play out over the next decades. Not over the next year, over the next decades, right? Like, long game to play here.
Demand. Meta doesn't have that enterprise backstop. Its bet is largely on Llama, its open source AI model family, which is, by the way, underperforming the benchmarks and facing growing open source competition from fast rising Chinese models like DeepSeek and Alibaba's Qwen. Carl put it well earlier in the show. How much spend is reasonable chase in the overall contest? And at what point is it undisciplined behavior? This chart calls Meta spend into question. For shareholders, though, this also means that there's less capital available to return to them. Meta's quarterly share buybacks were down 11% from last year, and it didn't do any in the fourth quarter. So whether the mega cap comeback is real, that remains to be seen. There's still questions. Amazon and Apple tonight.
But here's the thing, right? Meta, on a constant currency basis, just grew revenue by how much? 19%. Now compare them to Google. They grow much more rapidly than Google. Compare them versus Meta, compare them against Amazon. Meta's growing much more rapidly than Amazon, right? Compare them against whoever you want to. Compare them against Apple. The growth rates are not even in the same stratosphere, right? And so if you want to look like who's really the leader, it's Meta by a mile. All these other companies have revenues that are, up a very small amount compared to what Meta's revenues are up, right? So I think that's something to kind of keep an eye on here. And it looks like Meta's just winning. Like, regardless of what opinions are, 19% revenue growth on a constant currency basis speaks for itself. 19%, find another big tech growing at those sorts of growth rates other than NVIDIA. Good luck.
Help to either validate that thesis or walk back today's exuberance. There are also, of course, guys, we're well aware of them. We talk about them every day. Those macro and regulatory risks still looming, like changes to the AI diffusion rule that could make it harder for NVIDIA to sell GPUs abroad, and the many lawsuits and scrutiny building up both here and overseas.
I still go back to that big DeepSeek sell-off day, Deirdre, because, if you look at a chart of the Magnificent Seven, that's really where it started. Yes, Liberation Day didn't help, but there was a bigger decline into that from DeepSeek than after the tariff announcements. And I just wonder if some of those sort of big psychological questions have been answered with any of these earnings. The competition, from Chinese open source models like a DeepSeek, the return on investment for names like a Meta or an Alphabet, and whether it's worth all of that spending, given what we saw from DeepSeek. Those are just the two big ones. I'm sure there are more.
That is exactly right, Sarah. If you look at April, right, we had the so-called Liberation Day, but it's been extremely volatile. The moves haven't actually been that big. I do always go back to that DeepSeek moment, that huge Monday sell-off that raised all these questions about efficiency and the commoditization of large language models. That is still very, very much a factor. And I remember at the beginning of that, too, you probably do too, Sarah, there were questions around Meta. Meta was seen as benefiting, right, because this was an open source model that arrived on the scene, and the only really big company doing open source here was Meta. But actually what's happened since then, it's actually exposed a lot of the vulnerabilities and weakness in the Llama model and showed that it's not just DeepSeek, but it's Alibaba's Qwen. There's a new model from Xiaomi. There's just so much Chinese competition in open source, which is so much cheaper than what OpenAI and Anthropic and others are doing. This has absolutely changed the paradigm, and you're exactly right to point back to that moment.
Yeah, although Laura Martin said, I don't know how, she doesn't know how they're going to spend the money this year, and they don't always hit their target, even with the guidance. Dee, that's
great point. They are willing to walk it back sometimes.
But she's also been bearish on Meta for like the last few years. I missed the whole rally.
Dee, thanks for helping us frame it. So important. Our Deirdre Bosa
that was
this morning.
awesome. You know, I laid out exactly what all these big tech companies are going to do in regards to CapEx for the last several years, right? Told you 2024 was going to be a massive jump up versus 2023 spend. Told you 2025 is going to be a whole new level of spend, like quite substantially over 2024. But as I stated many times, 2026 is a year that you will start to see very slow growth rates in regards to how much these companies are spending versus what they spent in 2025. And I have no reason to disbelieve that. I believe when you look at Meta, Microsoft, all these companies, it's not that they're going to stop spending on AI. It's just the rate of growth is going to slow substantially and is going to get to, in my opinion, much healthier levels. Because right now, some people are freaked out with how aggressively these companies are upping the amount of spend on a percentage basis, right? Which I understand. But things are going to get much more evened out starting in 2026, 2027. And so these companies, it's not like they're going to say, oh, we're not spending on AI. They're still going to spend just as much as ever. It's just the rate of growth is going to be much smaller, much more controlled, and it'll be much healthier, in my opinion, right? And then it's going to be really fun because you're going to start to see a lot more results, a lot more money pour in for these companies that have been doing all this spend, which is going to be, you know, in my opinion, very, very fun times. And that will be the next huge leg higher for a lot of these, obviously a lot of these companies that are spending aggressively there.